Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex and gold fundamental and technical analysis for the week ahead, starting the 26th of January. I hope you all had a great trading week, and let's get into the week ahead and what's coming up. So next week, traders will keep a close eye on President Trump's policy announcements and key central bank decisions. The Fed is expected to maintain the federal funds rate, while both the ECB and BOC, the Bank of Canada, are anticipated to deliver another 25 basis points of cuts in borrowing costs. The week is also rich in economic data releases. Highlights include GDP growth figures for the US, the Eurozone, Germany, and preliminary inflation readings for Germany. Australia will also release its quarterly CPI, and in China, markets will remain closed starting Tuesday for the Lunar New Year celebrations. However, official PMI data will still be released. So, plenty going on this week. And let's get into really last week's fundamentals and some upcoming fundamentals as well. So in technicals, so let's start off on the dollar index. And the dollar index, equally weighted dollar index, ended up pulling back this week, which was kind of half expected, but I think with the dollar, it's being really more driven by the narrative of Trump tariffs rather than the fundamentals in the short term. So, President Donald Trump said he'd prefer not to have imposed tariffs on China. His latest dovish remark towards the world's second biggest economy, even as he continues to threaten sweeping action. So markets have taken it as a positive sign that Trump stopped short of imposing the tariffs on China in his first days in office, and his recent threats were softer than those issued last year. On the campaign trail, the Republican floated additional levies on China around the 60% mark, which economists have said could decimate US trade with a Chinese economy heavily reliant on exports. So when Donald Trump was, on his campaign trail, he was quite hawkish, and in terms of his rhetoric around the tariffs, and saying that he was going to impose large tariffs on China if they didn't play ball. And the market saw that as a positive for the dollar, and those policies, if implemented, would likely be inflationary, which would then mean that the Federal Reserve were likely to kind of hike rates. Now, he's come out and been quite tame and less aggressive. So the market's taken that as being, as dovish for the dollar in the short term at least, and now is starting to reprice what they think the dollar is valued at without the aggressive Trump tariffs. And so that's the reason why you're seeing a bit more of a pullback. Also, as well, the dollar, there was long dollar positioning was a very crowded trade. So there was a lot of traders who were quite long in last week's COT analysis and data. And so that also, there could be a lot of profit taking going on when it comes to the dollar as well. So I do think the dollar is still a buy overall, but it's just the timing of the buy, whether it's going to be this week or whether it might be next week, where prices pull back a bit further before going higher. But my overall bias is still to dollar longs, because from a seasonal, well, not only are they the only central bank that are holding rates at the moment, or expected to hold rates this week, when we look at the seasonal moves, for example, the euro dollar, and this is over the last 24 years, typically between week 2 and 9, and we're probably in week 3 now, heading into week 4 of the year. The euro dollar typically tends to move to the downside, meaning euro is the weaker, and the dollar is the stronger currency. So if the dollar's stronger, it typically is stronger across the board, not just against the euro. It'd be stronger against various other currencies. So from a seasonal perspective, there's that. So I do think, together with the monetary policy and expected monetary policy of a hold, while ECB, Bank of Canada, and others like the Swiss National Bank are expected to cut rates, I do think that the dollar is a buy. So the dollar is looking cheaper, right, as it pulls back. So let's see what happens this week. But I will be looking for continued dollar buys. But it depends. I don't have no idea whether prices are going to move to the upside this week, or maybe the following week, right? But I do believe that overall the dollar should be more of a buy. Fundamentally, I can't see myself being a seller of the dollar just yet until data really kind of starts to support that narrative, which is not at the moment in my book. So dollar yen, the Bank of Japan actually ended up hiking rates this week. Sorry, last week. They ended up hiking rates, and it says here that the yen is primed for further gains after the Bank of Japan sent hawkish signals while raising the benchmark rate. According to strategists, the upward revision in inflation expectations for the fiscal year 2025 have given room for the central bank to hike rates again this year in line with market expectations. The Bank of Japan raised its key policy rate Friday to the highest level in 17 years, and Homin Lee, senior macro strategist at Lombard Odier, says we will have to see how Ueda guides markets this afternoon in this afternoon's press conference, but we believe the Bank of Japan will go for a few more rate hikes above the 0.5% threshold that we previously viewed as a key hurdle. And Wee Koon Chong says, senior APAC market strategist for BNY, says the Bank of Japan rate hike is supportive for the yen and it is likely to further strengthen from here. So yeah, I mean there's definitely reasons to buy the yen. Would I buy it against the dollar? Not really. I'd probably say the dollar still has a bit of an edge, really, based on the yield differentials and really the carry trade. I do think that the until the Fed really start cutting aggressively, then I think that the dollar yen would be more of a sell. But for now, I think the interest rate for the Fed is still a bit too high, in my opinion, for really like investors to want to pile into or pile out of the dollar and into the yen. So you can look for reasons to buy or sell in this for this currency. I'm not really a seller. I'd probably look for maybe more buys to if prices do pull back. But again, with maybe like a smaller position, as I don't think that the divergence is something that's worth putting a full position on. But if it pulls back into that demand zone and the fundamentals still support more buys for the dollar, and Donald Trump starts to become a bit more hawkish with his rhetoric, then I think that's really the path of least resistance to the upside for now. Dollar Swiss, yep, still looking for buys, although we've pulled back this week. I do think that the dollar Swiss should be more of a buy than a sell. So either buy from this week, or if you do pull back into a deeper zone, I do think that that's going to present a much better buying opportunity. So yeah, the Swiss franc and the Swiss National Bank are very dovish when it comes to their monetary policy, talking about intervention. And the fact that they don't mind going down into zero interest rates or maybe even negative interest rates. So that's definitely not happening in the US. So at the moment, I think the dollar Swiss should really be a buy on pullbacks. The dollar CAD, whipsawing traders pretty much. And again, this is really due to the narrative around Donald Trump and whether he's going to impose tariffs on Canada. 1 minute he's saying that they are, then he might, pull back and say that he's not, and you know what I mean. And so at the moment, it does seem like the market is obviously on the confused side. So, but I do believe overall the dollar CAD should be more of a buy than a sell. So I think any pullbacks into the 143 round number, or just below that, or even if we get the 14150s, I think should represent a really nice buying opportunity. Looking at the pound dollar, right? So the pound dollar now has pulled back up into a nice supply zone finally. Now, I would want to look for short trades on this. I believe that the pound, you can look for reasons to buy the pound for sure, but against the dollar, I think the dollar definitely has the edge. The Bank of England are still looking to cut rates. There's still stagflation fears, meaning that the economy isn't, is looking to contract, but um, the inflation is to remain a bit on the sticky side, right? So when we go to the UK channel, news channel, it says here Goldman Sachs economist Sven Jari Steen has forecasted that the Bank of England will accelerate its pace of interest rate cuts, citing mounting evidence of economic weakness and softening inflation pressures. So markets anticipate 2 to 3 rate cuts in 2025 with a terminal bank rate of around 4%, but Steen argues that the central bank's cautious stance may soon give way to more decisive action as the UK economy faces multiple headwinds with rising trade tensions, slowing household disposable income growth, and the front loaded impact of fiscal policies. The economy is grappling with significant headwinds, Stein wrote. The outlook warrants a more aggressive monetary policy response to support demand, meaning aggressive, probably more aggressive cuts, right? And so, if that does start to become true, right? If he is right about that, then again, you've got one central bank which is more holding rates, which is the Fed, and then you've got the Bank of England who are looking to aggressively cut rates potentially. So I think a pullback, right, which is really kind of due anyway when you think about lower highs and lower lows, right? You get that, you get a pullback, and then we've had this kind of low, and you get a pullback, right? So ultimately, I do think somewhere around here should be actually a nice selling opportunity, as long as, of course, the dollar remains strong and the Fed are looking to hold rates and not necessarily cut too much for 2025. Pound yen was looking at this last week, and it was a bit surprising that the yen reacted in the way that it did in terms of a rate hike, but the pound ended up moving higher, probably due to some sort of more risk on sentiment coming into the market. But it was a bit tricky to kind of look at risk on sentiment, because you still had gold, and we'll get to gold a bit later. Gold ended up rising as well. So again, maybe not the risk off sentiment that we think it is, but I think it's more positioning. But there was an opportunity to look for shorts here if you were looking to buy the yen, but just didn't work out. But I do think that if we do pull back up into this area of supply, the 19550s, then you can look for actually another opportunity to look for a short trade. And again, especially if you have the Bank of Japan being a bit more hawkish and the Bank of England turn a little bit more dovish, so that could be a really nice opportunity and for a lot more downside potential. Looking at the euro index, now the euro equally weighted index is something that I look at like the dollar equally weighted index, and it gives really the strength of the euro or the weakness of the euro against all the currencies that we trade against. So the dollar, the pound, the yen, the CAD, the Aussie, the Swiss franc, and the New Zealand dollar. And at the moment, the euro has been really on a bit of a tear, right? And I think it's more to do with the weakness of the dollar, or the short-term weakness of the dollar, as well as expectations for interest rates being pared back slightly, not by much, but slightly. So the euro is heading for its best week in more than a year after investors pared back expectations for interest rate cuts and bet that the US trade tariffs won't come into force as soon as previously feared. So that's really the narrative for the euro. So the weekly gain marks a recovery of a slump in the currency since September, driven in large part by a concern that Donald Trump would target Europe with tariffs after his January inauguration. Instead, the new US president has focused his immediate attention to Mexico and Canada, with penalties on Europe expected further down the line. So the fact that Trump has not immediately implemented tariffs against Europe or other trading partners has helped to partially revert the euro bearish move, says Roberto Cobo Garcia, head of G10 FX strategy at BBVA, who expects the rebound to continue in the near term. Valuations, technicals, positioning, and market pricing for the European Central Bank all suggest the euro short is a bit overdone. So ultimately, the euro, gaining in strength based on a combination of things, but ultimately they are the European Central Bank is still cutting rates. So I think it's probably maybe some sort of short squeeze where you have traders who are short being squeezed out of their positions, and I do think that ultimately the euro should want to roll over, as I don't think their economic woes have gone anywhere. And again, the central bank is still looking to cut rates more than the Federal Reserve. So as long as that is still the narrative, I do believe that the euro should want to roll over. So looking at the euro dollar, putting back up to the 105s at the moment, I think should be a decent selling opportunity. Now, again, no one knows where exactly prices will reverse, but you do have a couple of areas where there has been areas of support and resistance within areas of supply, and really support and resistance just indicates where the institutions and the banks were buying and selling the most, right? But they had the reaction. So as well as supply being a measure of value, right? And so past value. So the euro was considered expensive around here, uh, because obviously it weakened, and the dollar was considered a bargain around here because it strengthened, right? And now we're back up into an area where we could potentially get that that same reaction in this area, right? So ultimately, my bias is still to the short side. I know some traders will start to look for the long trade and look for buys, but if you are looking for buys on the euro dollar, then you're really waiting for a pullback into that area there. So a bit of demand, right? So waiting for a pullback into demand, right, before looking at going long. But remember, talking about from a seasonality perspective, where are we? Yeah, from a seasonal perspective, last 24 years, the euro does tend to weaken and the dollar tends to strengthen. So let's see what happens over the next coming weeks. But my bias would be more to look for short trades in this supply zone than looking for long trades. Euro yen. So euro yen, again, a bit on the surprising side, the fact that we came up into a level of supply, sold off a little bit into that area when the Bank of Japan had their rate decision, but then we went a lot higher. We'll say a lot higher, but we went a bit higher. But ultimately, I think again, it's just clearing out a lot of euro shorts, and so the euro strengthening is just clearing out the liquidity side of things, and we could see actually a move to the downside. But let's see what happens if prices come up a little bit more in this area. One thing I would say though is just be mindful, because this level has been touched once, twice already, and so the more times the level is touched is the weaker it does become and more susceptible to stop hunting. But if you are looking for long trades, then you can look for a pullback into that demand zone before looking at going long. But with the yen, with the Bank of Japan hiking rates and the euro cutting rates, I would expect really the euro yen to kind of roll over at some point. Euro pound did come up to this area of supply, which I think last week I highlighted as it being a bit of a potential stop hunt, which it did stop hunt, and then it rolled over, right? But the issue for me fundamentally was that the pound was a bit more on the weak side, and so was the euro. So I wasn't really interested in taking this trade anymore. Although it did work out technically. I need the fundamentals for me anyway to look for any kind of trade. If you are looking to buy the euro against the pound, then you're looking at going long probably now. If you're looking at any kind of short trades, then you have to wait for prices to really kind of come back up into this area of supply. And then look for a short trade, but this is not really a pair I'm looking to trade at all. And then we've got Aussie dollar, and again, I think the Australian dollar is kind of benefiting from um, some overall dollar weakness. And of course, if Donald Trump is dovish on tariffs to China, that is actually a bit positive for the Australian dollar. So as the Australian dollar benefits from a stronger Chinese economy. So if China is looking to, avoid the tariffs and continue to strengthen from an economic perspective, then that also benefits the Australian dollar. So we could see some more upside. If you're looking for a trade to the short side, though, maybe there that would be decent, or a potential close back inside this supply zone, as that area there looks like a stop hunt, a potential stop hunt. So you could see prices just close back inside the area. That would be more of a stop hunt trade, and then you look for just a trade to the downside. But again, while you're in that trade, you're just hoping that Donald Trump starts to be a bit more hawkish with or a bit more aggressive, I should say, with his tariffs, right? So either trade scenario if you're looking for a trade on this currency pair. Gold. So gold's again been a bit of a tricky one, because at the same time we've got a bit of dollar weakness, which typically would mean that the gold should move to the upside. You also have more of a risk on scenario, because if Trump isn't raising tariffs, then that should be more risk on sentiment, and gold shouldn't necessarily move to the upside in a risk on environment, but it has. So, yeah, gold at the moment a bit definitely more of a trickier trade. And as I said, over the past couple of weeks, I'm not really looking to trade gold at the moment until things become a bit clearer. But we are reaching the all-time highs again. It really just does depend upon what the market narrative is, and at the moment it does seem like the market narrative is maybe for a weaker dollar, maybe higher inflation potentially, which is what's driving gold to the upside, but it's not really driving silver to the upside if you look at a silver chart. So at the moment, who knows, right? Who knows? It's like I said, a very tricky one to kind of understand at the moment, the direction, or the why the direction of gold is going to the upside. Because just as you can make the case for why you should look for buys on gold, you can make an equal case for why you should look for sells on gold. So when you get in those kind of mixed signals on a currency pair, or gold or silver, it's best to just kind of stay out until you get more of a definitive idea as to why and what is driving the currencies. So yeah, for me, I'm going to stay out of gold for now until things become a lot clearer. But if you're looking for a buy trade, and a pullback into any of these demand zones should be decent for a buy. And of course, all-time highs are decent for sells, but just understand that there's going to be a lot of traders looking at this level, and there's going to be a lot of liquidity potentially resting above that. So that is obviously potentially a stop hunt area where you could get stop hunted. So if you are looking for a trade on this, maybe a wider stop would be more appropriate. And then we have the S&P. So the S&P making new highs as well. 1 second. Yeah, so S&P making new highs, and yeah, I think we're always going to make, at least some decent highs on the S&P. From a fundamental perspective, I guess the US economy is doing decent. So ultimately, the S&P should do well. The fact that the Federal Reserve are not really cutting rates as aggressively, though, is a bit of I would have thought would have maybe been a bit more of a negative for the S&P, but it just seems to be grinding higher and higher and higher. So let's see what happens with the S&P. We are again at making new highs. So typically when we make new highs, this could be a bit of a stop hunt. So just be careful, because if this closes back inside the level to any degree and a decent, then that could look like a nice stop hunt, and then you're looking for a move to the downside. The question is why is the S&P going to continue grinding to the upside, unless the market believes that more rate cuts are coming? And if rate cuts are coming, then of course that makes all the sense in the world. But let's see what happens on the S&P. Probably looking for a pullback, all right, into that demand zone before looking at going long. And that brings us to the end of the analysis for the week. And so let me get into some trades. So this week really hasn't been a great week at all. Been actually a bit unlucky on for the euro dollar, for the sake of literally 1 or 2 pips. I ended up losing 8 positions rather than probably around 3 positions, had those, for the sake of those pips, if they had come in my favor, then I would have actually lost maybe 3 positions, and maybe just one position with an open swing trade on the Swiss yen. But I'll talk about the Swiss yen first before I go into the euro dollar. So Swiss yen, really the reason why I went short here was because the Swiss franc and the Swiss National Bank are quite dovish when it comes to their monetary policy. And so and I was basically banking on the yen and the Bank of Japan being hiking interest rates and being a bit more hawkish, right? Which is basically what happened. So my entry, this was at the top end of that daily supply zone, right? So the top end of that move there. So you've got lower highs and lower lows being made. So low, high, low, high, low. Yeah. So the move that makes, the start of the move that makes a new low, right, is where I'm looking at taking a trade around this area here. So when prices pulled back this area, I was just looking for a sell trade. My sell trade came at this time right here. So this was my entry, right, and then I enter into some short pending orders right here. So at these lines right there. So 17255, 1727728, and then 17287. So I'm looking for sell pending orders, which is basically what happened. And when prices pulled back to here, right, that's where I got a second position. Once I get into a second position, then what I'm looking to do is take profit at a 1-to-1, which is what happened here. So a 1-to-1 trade was achieved right there, and then all I'm doing is looking to swing trade and hold the original market order position, right? So then we had a bit of a pullback, and then we had the Bank of Japan hike rates. So that should have driven the market down. We end up getting a pullback all the way back up into this area here, and my stop loss now, I've trailed it down to just above the swing. So I'm in one position here, and I've won one position, right? So I'm hoping that this price action should continue falling. Maybe it's just taken out a whole bunch of traders who ended up going short here, pressing sell, and then obviously stop hunted them all out before clearing them all out before moving to the downside. So with one central bank, the Swiss National Bank, being quite dovish, this Bank of Japan being quite hawkish, I would expect prices to eventually start to roll over. So the trade update is for the euro dollar. So last week, before I think it was the Trump inauguration, which was on the Monday, I was saying in last week's video that my take profit was literally here, And on my broker, it was literally 1 pip away, about half a pip away from basically taking profit, and it just did not take profit, right? So prices spiked down, air kissed it, my take profit, and then ended up reversing. So if I had reached profit target on this second position when prices pulled back, which was here when prices pulled back, so my original entry was here, and then my second position was here when prices pulled back there and then went to the downside. I'm looking to take a 1-to-1 off at that area there, but it just did not hit my 1-to-1 profit target. um Therefore, I still have these other positions remaining open. If I hit a profit target right on this, then I'm canceling these orders. I'm taking that risk out of the market. So and I would only have then a profit target of achieved a profit target on that one, and then I'm just looking at, swing trading this one, right, with the other two positions being cancelled and taken out of the market. But that just did not happen. So I ended up losing 4 positions, all 4 positions when prices spiked up. And this was really, I think it was Donald Trump, or the rumor that Donald Trump was going to be a bit dovish with the tariffs. So he hadn't come out yet, but there was reports that he was going to be dovish, and so that is what kind of ruined the trade. So I ended up getting stopped out on 4 positions on that one. And again, that's something that you can't help, right? You can't legislate for, in terms of whether a news report is going to come out and then it's not going to go in your favor, because some news reports do go in your favor and some don't, but this one, unfortunately, it didn't, right? And so then I took another trade, right? So the second trade was around here. The entry was right there, right there. Oh no, sorry, it was not there. It was here. That's where it was. That's where it was. So second entry was right there. Stop loss was above the high. So then I was looking at, obviously swing trading to the lows, which I had a decent amount of risk reward before I'd get, somewhere close to the lows anyway. So I thought it was worth taking. And so again, like the other trades, like my usual trades, I'm looking for a market entry. Then I'm looking for pending orders in case prices do pull back and I can get better risk reward, right? So if it pulls back to there, then I've got better risk reward. Then if it pulls back to there, then I've got better risk reward. And if it pulls back to there, then I've got excellent risk reward. So on this one, it pulled back and triggered me into 4 positions. Now the top position, that last position, ended up hitting a 1-to-1, right? So when it pulled back here, brilliant, got a nice 1-to-1. So it triggered here, got a 1-to-1 on that position, brilliant. So then I had 3 positions open, and so my 3 positions that were open, prices ended up pulling back, and it stopped me out, literally took out where my stop loss was. It just pipped me out by by a pip. If I had my stop loss maybe a pip or two above where I'd actually originally put it, I wouldn't have been stopped out. But it literally just, the top of that candle was where my stop loss was, and it took me out. So yeah, I ended up losing 3 trades on that trade. And yeah, so that was pretty much, unfortunately, uh, uh, 1 win and 7 losses. So in fact, so it wasn't 8 losses, it was 7 losses on here when prices ended up just spiking me out. So 1 win, 7 losses, 7 positions anyway, because I count this as like one trade. So one trade broken down into 4 positions. So 4 positions lost there, 1 position won, and 3 positions lost. So 7 positions lost on the euro dollar, and then on the Swiss yen, I've won a position, and I'm in an open position still on this trade. Now I'm looking to trail down my stop as well. So that was last week's trading. Not great in terms of the result, but I followed the plan, and the plan works over the medium to long term. In the short term, you don't necessarily know which trades are going to win or lose. So it is what it is. We just go for more risk, more rewards on our risk trades, and eventually you make back the money, right? And then make new equity highs. So that's it for this week. Hope you enjoyed the analysis, and I guess I will see you guys next week. Have a great trading week. Take care.